Welcome to A View from the Floor here at the New York Stock Exchange. I'm Michelle Yu and joined by a very special guest. We have Michael Reisner, Co-CEO of CION Investments. It's great to have you here. And let's talk about the growth of private market alternatives and how they're being driven by individual investors. Can you talk to me about the size of the market and the runway?
Listen, the size of the market is multiple trillions. The way we look at it is the average retail investor only allocates about 5% of their portfolio to alternatives. We see that as a tremendous opportunity. Depending on the survey you read or the study, only about 20 to 30% of financial advisors are currently utilizing alternatives. And we think that number could grow meaningfully here in the next couple of years.
Innovative fund structure seems to be the access point for these strategies. Can you elaborate and go into detail about that?
Sure. So recently you've seen a proliferation of evergreen structures, which provide intermittent liquidity. And it's just a great marriage to allow an asset manager to invest in illiquid assets in a fairly illiquid structure, and as opposed to the traditional drawdown structures. So as these structures have evolved, it's become easier for the private wealth channel to access these investments. And I think you're going to see more of that. At CION, we focus on interval funds. I think about a decade ago, you saw about 10, 12 of them, and now there's over 100 interval funds in the market. So you're just going to continue to see more of those.
What are some pain points that advisors are looking into when they're trying to add more private market access to client portfolio?
Sure. So it's still relatively new. We're in the early innings here. Many financial advisors have been trained on that 60-40 model. And now all of a sudden we're throwing alternatives at them, different asset classes, different asset managers, and it's drinking a little bit from a fire hose. So they have to sift through everything. There's a lot of dispersion between managers. And it comes down to education. So we have to let the financial advisors know what the products are, who the good managers are, how all managers are not created equal, all products are not created equal. Again, so that's a great opportunity for us people that's like CION.
With so much uncertainty and volatility these days, what kind of strategies resonate with investors?
Sure. So, I think you've seen real estate starting to come back. We're very bullish on infrastructure. Besides AI and digital imaging, just there's the capital needs in traditional infrastructure, bridges, tunnels, airports, private credit. Despite what you've heard in the media, I think a diversified private credit strategy, whether it's focusing also on direct lending in the US, in the UK, ABL lending. So we still think that's a hot area to go.
Looking ahead to 2026, what are you guys looking out for?
Listen, I think, despite kind of predictions to the contrary, the economic backdrop is pretty strong. So I think not only in equities, but traditional alternative assets, we think it's going to be a risk-on atmosphere, and we're excited.
Michael, thank you so much for joining us here at the New York Stock Exchange.
Thank you so much for having me. Appreciate it.
And I'm Michelle Yu. That'll do it for us here on Wall Street. We'll see you next time here on Asset TV. Take care.